All right. Since this market is not doing anything super important, want to take a second and explain the way I've been trading to you guys. It's just like just for you guys, just for the mentorship kind of deep dive on this model that I've been using lately. So it's still ICT, which I don't like the word ICTs. It's still SMT, smart money concepts, but instead of it being the order of operations where it's liquidity sweep, impulse move, retracement to fair value gap, building block, whatever, paired with like equilibrium and all that stuff that we went over. Look for the break of structure on the low time frame retracement, the uptrend of that low time frame, target opposing liquidity. That was the one we went over inside of the mentorship. But I do also want to show you this one. It's been super useful lately. Today is an exception. Today, the first model would have worked a little better. Wasn't really keeping my eyes peeled for it, but it clearly played out. So I'll show you that real quickly. But then I want to go over this new model just to add to your arsenal. Now, most people, when they think about this stuff, they're like, I don't want to strategy hop. Okay, it's still the same stuff. It's SMT concepts. It's just another order of operations. So don't think that you are strategy hopping or anything. Arsenal, just, extra weapon in your arsenal, extra opening in your repertoire, if you would. So yeah, let's just go over this. It's probably gonna be a little longer video just for you guys. Let's see. Okay, cool deal. It's funny, there was like missing charts on the side screen right there. Anyway, real quickly, just to show you this one, just to show that it does still work. The one we went over, we can see right here, we swept major liquidity, right? So this was yesterday highs. We swept it in pre-market, and then we took out the pre-market technical London highs, and we see a impulse move if we go to the lower time frame. And if you look inside of this, just to break it all down for you guys, this is the impulse move. Inside the discount, we have a technical fair value gap. Ta-da. That is a crazy trade for me to even think about trying to take. The only thing you could have done, wait for the break of structure of this low time frame retracement, which then is a high time frame, or the low time frame uptrend, high time frame retracement, right? Target opposing liquidity, filling the inefficiencies and all that fun stuff. So it does still work. It's just because I'm showing you this doesn't mean that now all of a sudden what we had gone over is invalid. I just want to continue to give value to you guys. Which shit, it might keep dumping. Which low key, I mean, technically, you probably could. There's just no way I really want to take this. Like, that's the thing. Because, like, if I take that short, let's say, yeah, no, I'm not going to trade today. 11 o'clock, there's no point. Anyway, so let's go over real quickly what you're going to need to do this. And we're going to use this one. Okay, you're going to need 3 things. You're going to need to know how to form a bias. Whatever. Biased. Okay, you need to know what IFVGs are. And then you're going to need point of interest. Okay. Point of interest are like liquidity, equal highs and relative equal highs, or equal lows and highs, right? L and whatever. You're going to need intermediate highs and lows, right? Which I'll show you what they are in a second. And then like high time frame FVGs. Okay. It's pretty much in this order, right? So you're going to need to know how to form a bias so that you come in the day and go, okay, I think today is going to be short. We're going to look for a short, and then fair value gaps. You guys should already know what they are. Should know what liquidity is, right? Gone over this. There's videos. Relative equal highs and lows and equal lows are literally just as they sound. Relative equals are within like 20 points. Think of it as low resistance liquidity. Intermediate, high, and low, we'll go over in a second. High time frame value gaps, just exactly what they sound. So if you know those 3 things, cool. Just to show you what a intermediate, low, and high is. So right here, we're in the 4-hour chart. You can see there's a 4-hour fair value gap. we respected this fair value gap, right? Yes. But down here, we have a low. Okay. That low is an intermediate low inside of the 4-hour fair value gap. Okay. So what I'll typically do on my chart is come on here, put that, and then put the time frame. So it's a 4-hour intermediate low. Right? Let's find another one real quickly. Let's just go find right here. Bam. Just another form of liquidity, long story short. 1-hour fair value gap. Inside of the fair value gap is a low, right? That would make this a intermediate low. And just for simple sakes that I like to do, and you don't have to do this, it's a 1-hour intermediate low. Find some bullish ones. Bingo. See, 1-hour fair value gap. I think I said bullish. Let's just find some highs, right? Intermediate high. Okay, on the 1 hour. Let's go to the 15 minutes, show you a couple more just to show that they work on all time frames. 15-minute fair value gap. Right, 15-minute chart, 15-minute fair value gap. This is a high inside of it, right? Bam. This is a intermediate high. And you'd put 15-minute in front of it if you want to, right? All it is basically the highest point inside of a fair value gap. Right? Now, the only thing that doesn't make it a fair value gap or an intermediate high or intermediate low is if we invalidate the fair value gap. So if we go find, let me just clear this chart up real quickly. Everybody out on bikes today, man. I'm getting jealous. So right here, all right, hypothetically, 15-minute fair value gap. Okay. This candle right here was an intermediate low. Okay. Right. We came down, we respected it on this 15-minute candle. We created a low. They respected it. It did hit the other fair value gap, but then the next candle closed below it, and we inverted this fair value gap. Right. I'm actually kind of curious to see something. Okay. Technically, yeah. So that is what gets rid of them. Okay. Now that you kind of understand what they are, 7 minutes in, let's go straight into the strategy. Okay. So order of operations is going to look like this. Okay. Just like I have showed you guys before, which let me see if I can pull it up. Bam. I don't know where it's going to open up at. Right here. Right. This is like the order of operations kind of thing, right? Think about PIMDAS in math. If you don't know what it is, just go Google it. But it's very similar. You have step 1, step 2, step 3. Just click, 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 click. Entry criteria. So real quickly, and I'm not going to make it perfect, but, you know, use some of your own knowledge, what we're about to go over, and kind of edit this one and make it more perfect. So step 1, or I guess, yeah, let's just call it order of operations or ops. Is that how you spell ops? I guess. I guess it would just be this. Order of ops. So 1, we need point of interest. Why can I? You guys already know I can't spell. Point of interest being hit. Okay. 2, break down chart to see leg that hit POI. POI is point of interest. Okay. Break down the chart to see the leg that hit the POI. Step 3, find the time frame that has a singular, that's spelled I feel like I spelled that right. I don't know. Find the time frame that has a singular FVG in the leg. Okay, this one makes not a lot of sense yet, but we will go over it. Wait, step 4. Wait for price to invert the FVG. 5, enter and target opposing, right? Whatever word you want to use, but target POIs in trade direction. Okay. And then tips, target like a 1-to-1 RR, or like a 1-to-1 to like a 1-to-3. Okay. The reason it's not like the other one where, you know, occasionally if you break down all the charts and the time frames, you're going from like a 4 hour down to the 1 minute, yada yada yada. You're able to really snipe that entry and potentially play it out over the X amount of times, and get a 1-to-9, 1-to-10, 1 to whatever. Except your win rate is significantly less. Okay, with those types of trades, you kind of have about a 60, 65, 68, depending on how like you want to intuitional, or, you know, I don't know what the word I'm looking for is, but your discretionary entries and whatnot that every trader has with that strategy that we went over, you're gonna have about a 60 to 68. The highest I've ever gotten was 73% win rate. So there's that. With this one, you're gonna have a much higher win rate, but you're gonna target less risk to reward. So right, if a 1-to-1, but you're winning, you know, 3 out of the 4 trades, then great, you're profitable. If you're, you know, 1-to-4, you know, it's even better. 1-to-whatever, it's even better. So you can use that stuff to just grind every single day, make a couple $100. The other thing is so for tips as well, this is great for market open. So if you are someone who wants to get out of the charts, just, you know, get away after like the first hour or so, this is going to be very useful for you because you're not going to have to sit and manage the trade the entire day. You're looking for a quick scalp, basically right off morning open, make a couple $100, get the fuck out. Cool. So if you want to take a screenshot of this, by all means. Can I save this? Oh, I can. Save drawing as order. We're going to call it OOO, right? I guess technically order of ops. We're going to do order of ops, just so we can refer back to this in a second. Okay, now I'm going to first show you an example of this working out perfectly. I mean, this was an A+ trade, and if you're watching this, clearly you know how to find my YouTube channel. Go on my YouTube channel. For the last couple days, this is all I've been trading, just because I'm not the biggest fan of this market right now. After the insane losing streak I went on, I had to reevaluate everything, look at where my shortfalls were, what was I doing wrong, and I was missing the key entries because I was waiting on some retracement that wasn't actually coming. And if we look today, it's basically the same thing, right? Unless we're looking to short right now, which maybe, but you're waiting for where, right? With equilibrium from this high to here, you know, we just hit it. No guarantee we even, like, where do we target down here, right? And then you're just shooting a shot. It's kind of where the pitfall was. So this is the adapted version for the current market that I think has a very high success rate. Now today I have no trades, so shit, part of the game, right? Anyway, so let's go into this and let's go select bar, and we're going to go pre-market open, right? So market opens in the next 15-minute candle. Bam, we're looking at it. Just quick bias because this was Monday, which there's a YouTube channel or YouTube video on Monday. Just go watch the trading recap. I don't remember how much I made. A couple $100, I think. So bam, we come into it. Okay, we have points of interest, right? This is London low. This is Asia high. And then I want to say either this or, yeah, it would be, I think this is London high. Little bit of liquidity right there. We'll go to the 1 hour. It's going to cheat sheet it, but I don't really care. You know, we got a fair value gap right there to watch out for. We look down in this leg. Okay, bam. Right, we have, and you can draw them out with boxes. I don't really like crowding my charts up, so that's why I've been using this. But fair value gap, if I want to put the time, I can. That is a 1 hour fair value gap. Bam. Which then, guess what? That's a 1 hour fair value gap that we respected. What does it make London low as well? Right? It also makes London low a 1 hour intermediate low. So I can do 1 hour intermediate low and leave it as red for my personal sake of, oh, hey, this is a session liquidity spot. I forget the camera's inverted. I don't know why I care about my hair right now, but whatever. Cool deal. Okay, the other thing is, now that we have some, and I'm not gonna, there was so many more points of interest that you can go see in the video. But those are just the ones that I really want to mark out. We can see, okay, we're in an uptrend, right? Pivoted here. Higher low, higher low, higher low, higher low. Let's go to the 4 hour. Bam. We had a clear extension, break of structure, whatever, right? What we're doing is we are respecting bullish fair value gaps and disrespecting bearish fair value gaps, right? So that gives me the sign of bullishness. And then we also filled new week opening gap on the Thursday or whatever. So it gave me, we took out the buy or the sell side objectives, right? The liquidity on the lower side. Cool. So now that we have all this figured out, let's go back to the 15-minute chart. My bias for the day is upside. I think this market is going to go higher. Okay, but I think we also potentially are going to want to sweep out some of the liquidity. Okay, and for this day, I believe exactly how I was feeling is a little unsure, but skewed to the upside. I was open to downside just because I know the daily chart screams a different story, right? But that's for today, actually. But what I wanted to see is, can we take out, some of these draws on liquidity, maybe take out London, push a little lower, look for a move higher, or can we see like a push up higher and find the polar opposite, a short somewhere up there? So let's go 5 minute real quick. What time is this? Bam. I think it needs bingo. Okay, opening minute candle, 5 minute candle has played out. Let me skew this a little short so we don't have that text right in front of us. Bam. So we have now taken out all of this liquidity, like relative equal lows is what this is. Taking that out, we've taken out London, we've hit all these fair value gaps, right? We've filled a lot of it. Cool. So if we go to the 1 minute, and remember, live time, you're able to do this, right? Because you got more than 2 seconds, like we do in replay mode. So you're able to do this in real time. But you want to, as you hit point of interest on this 1 minute chart, you want to start breaking down the chart. So this is where's the text box? And then this order of ops. So right now we've found point of interest. They're being hit, right? They've hit. Okay, break down the chart. Find chart to see leg that hit POI. Bam, there's the leg, right? It was the leg down, the move down or up to take out the point of interest. Cool. Step 3. Find the time frame. Technically this should be find the time frame 1 to 5 minute chart that has a singular fair value gap in the leg. Okay. Right here, 1 minute. We have a fair value gap, singular. Cool. What about the 2 minute? No. 3 minute? No. 4 minute? No. 5 minute? Absolutely fucking not. Okay. So the only fair value gap that we can see is on this 1 minute. Right there. Okay. Now, we are waiting for this fair value gap to get inverted. For price to 100% disrespect it, not create intermediate highs or intermediate lows, but completely invert the fair value gap, aka have a candle close on the opposite side of the fair value gap, right? Not a wick, a body close. So is this candle that we're seeing right here an inversion? No, it is not. So we don't do anything. Click again. Technically, that is an inversion. Okay. I felt like I was trading this on a different time frame. I'm gonna be so frank. I thought it was a 3 minute or something, but maybe I'm just completely wrong and it is that 1 minute. Right, it spoiled it. I know you saw that, but so I thought it was a different time frame. I don't really remember the exact trade, but ta-da! What you do is then you enter. Okay, you enter in the direction, the long, because remember it aligns with our bias. We've hit a point of interest, aka to free up this market. And now we have this. So now you take your stop and you can either, there's a couple places you could put it. You can put it at the other side of the fair value gap, which is the riskiest but lowest risk trade. You have the highest probability of getting stopped out. You can put it under this wick. You can put it down here, right? Some people will put them all the way down at these swings lows, wherever you want. Personally, I would probably put it right in between this and then just manage it pretty quickly. Manage it meaning like, okay, if we got a nice move up a little bit, I would just put it like to the bottom of this fair value gap, or maybe inside of the fair value gap, not looking for it to retest. And then we are targeting opposing objectives. I don't know if this is the exact trade I took. I don't know. Let me see if I have a Monday's price action. What day of the week is it? The 9th? It's not, by the way. Okay, so this is not the exact trade I took, but it's still a valid one. I'll show you the trade I took too. You enter and you target opposing liquidity, which in my suggestion would either be 155, maybe somewhere up here at the 180, whatever, etc., etc. Right, and right there you're already having a 1 to basically 2. Take on the next candle. Right, so you can see right there, trade's done. You're done for the day, and it's X amount of time into it. But this is not actually the trade I took, but just to show you a trade example that I thought I took because it's so fucking clean. Now I want to show you the one I did take, because I see it here inside of Discord. So I was on the 5-minute. So I guess I didn't take this one, which is why I guess I was feeling a little off. We created this one right here, right? A bullish fair value gap that I want to see get respected. We click it, right? Looking for a continuation move. I believe, yep, come back to it. Okay, hit a point of interest, drop to the 2-minute. There's the leg that hit the point of interest right here. The leg down is that the time frame that has a singular leg. Let's look. 1 minute. There's a fair value gap right there. So okay, we could use the 1 minute. Let's check the 2-minute. 2-minute has a leg too. Let's check the 3-minute. 3-minute does not have a fair value gap. 4, no. 5 does not either. Right, so we want to use the highest time frame with the singular leg. So that's why we don't use the 1 minute, and instead we use the 2-minute. Okay, you want to use that highest time frame for the highest confirmation. Bam. Now at this point, I had some confluence in the trade. We had an SMT. We had a whole lot of shit. ES didn't take out London lows, NQ did. We had an SMT. I was thinking upside continuation, move. We're in a high time frame trend. This whole entire pre-market downside we've been seeing is a retracement for a high time frame uptrend. So I had some confluence to put some risk on. So right here, I entered what I would use as runner size. I went ahead and entered on these candles down here inside of this 5-minute fair value gap, this bullish 5-minute fair value gap, and plan to enter the rest. I was risking basically nothing. But then, I was waiting for confirmation of the inverse fair value gap on the 2-minute. Danced around a lot. I think, yeah, this one. Bang. You buy, because now you have, it's 2 minutes, so you have to wait. So if that fair value gap is on that 2-minute chart, you have to wait for that 2-minute inversion, right? Just because you have a 5-minute fair value gap does not mean a 1-minute candle closure is going to be the inversion. Okay, if the fair value gap you are looking to get inverted is on the 5-minute, you wait for the 5-minute candle. If it's on the 1-minute, you wait for the 1-minute candle. If it's on the 4-minute, you wait for the 4-minute candle. I think that makes some sense. Hopefully it does. Just, you got to wait for that same time frame that the fair value gap that you're looking to be inverted is closed on. Okay, I hope that makes some sense. If it doesn't, just let me know. Right, so at this point, my technical average entry was somewhere inside of the 150 range, I believe. Yeah, just under one of these 1-minute candles. Okay, my stop was 20, I believe, or just inside of that candle. So it would have been right in here. Okay, and then I had a TP. Why can't I see it? Trying to find yeah, looking for a 2-minute close above 61. Look at that, 61.5. Yada yada yada. Wanted to scale out at 215.25. So one of my take profits was 215.5. Oh, I think that's where I wanted to move to break even, right? And then target, I think it was a 15-minute intermediate high. Again, just go watch the YouTube video. I don't know exactly. The only thing I didn't do right is I think I closed it too soon. But I don't remember exactly where my target was. It was either here or it was in here somewhere. There was somewhere above 215. I want to say it might even been these highs, right? For about a 1-to-1. and I got over a 1-to-1. Oh, I guess, well, I didn't have the best. I had a better entry than this. But click, and you'll see. So right here, the reason I took it off right there, because one of the points I wanted to scale some runners out, and I was already at break even, by the way. So once we broke above this, now mind you, my actual entry for this trade was like down in this range. So once we took out this high right here, my trade was already at break even, but it doesn't matter. But you can put it at break even there, or you could leave your risk or manage your risk, right, just to minimize it. And you can see I took it off right there though, because 215 was a point. ES had hit a major liquidity spot, whatever. Spooked me a little bit. We chopped around, and then I believe, yeah, he ended up just smacking through it. And I want to say we even took out a little more objectives to the upside. Yeah, I think we take out these highs right here, if I'm not mistaken. No, we do not, because I think this ends up just chopping around all day. But yeah, that's the trade. So show you guys one more example. I believe Wednesday had a good one. Let me see. Yesterday had a good one. What today's Wednesday? Tuesday. Did I not trade on Tuesday? Oh wait, I did trade on Tuesday. What was the other day that had a really good one? Let me see. Thursday did. Da, da, da. Trying to remember the trade. Select bar. I don't know why I was doing that. Select bar. Bam. Let's see if I can find the trade from Thursday. 5 minute. What day of the week is this? The 5th? I don't think I posted anything on the 5th, did I? That's the 6th. Okay, here we go. It was a long, and looks like a 1 minute. Okay, cool. So I came into the day, I guess, with a bullish bias. Not too sure why. Oh, you know what this was? I took a long, and it was a short bias, so I was counter trend, so I didn't target a lot, but there was a better trade going short as well. Okay, cool. So you get two. So point of interest down here, liquidity and shit, yada yada yada. You can go watch the YouTube video. Right. You know what? I feel like I'm kind of short selling you guys if we just look real quick. Right. We have all of this like lows down here, so I'll just mark them out. I don't know exactly where the pivot point is. It wasn't like a whole move down, like a crazy move, but just like marking out some of these points just to see where they get respected. Go back to the 5 minute. What time of day is this? This is way early. Click. Okay. Oh yeah, this is market open. Okay, so that's just about market open. No, it's not even. What the fuck? Okay, hold on. I thought we were much closer to market open. Bam. So then select bar. Here is right before market open. I remember this now because Wick and I were trading this day. Or someone and I were trading this day. We have this relatively low. If we go to the 15 minute, all of this right here is imbalance, right? Fair value gaps, relative like equal highs on the 5 minute on the low time frames, right? So everything up here is possibly needing to get filled. If we go to the 5 minute and look in that range, you can see we had, you know, just fair value gap here, relative or intermediate highs there, right? So wanted to see a point of interest, London low get taken out, look for a move, click the candle. I guess that's not market open. What time is it? 1, 2. Bam, drops down. Cool. We go to this chart. I was actually looking at the 30-second chart. I ain't even about to lie to you guys. Because right after market open, we filled this imbalance or hit this key point of interest. We inverted it. Bam. Wait for the candle. It's 1 minute fair value gap. Wait for the 1 minute. You go long. Okay, my stop is. That's the 6th, I believe. Is this the 6th? I don't know. 5th. Okay, yeah, so risk was like right under here somewhere, it looks like. Right, just back under it. Target a 1-to-1 roughly. So up to here, somewhere in between, whatever you guys want to do. I mean, right, there's all these kind of need to be taken. Safest ones here. Counter trend. You know, let's just put it up here just to see. I don't really remember exactly how this trade plays out. I just know it results in a short. Click. So by now your stop should be at break even. Okay, so I did get filled. Cool, right? Easy long, inverse 1 minute, counter trend, whatever. Now, since it's counter trend and we just hit a point of interest, right? You can literally invert this again. There was 2 trades here, and the best one was actually to go short. But right, so point of interest, as we discovered, that's why we took profit there. So point of interest has been hit. We go to a leg that took us up there. Bam, 5 minute. Singular fair value gap. There's no fair value gap up here. There's no one right there. So this is the only leg. We go to 4 minute. Let's check. No fair value gap. 3 minute. There is a fair value gap as of right now. Okay. 2 minute. There's a fair value gap right there. Right. And there's a bunch on the 1 minute. So highest time frame with a singular fair value gap is the 5 minute. Cool. So what are we looking for? We're looking for a 5 minute candle to close on the opposite side out of this. Click. Click again. Okay, click again. Now, at this point, we've taken out all of this shit. Bam. We then sell. Okay. And I know exactly where these targets are. I just don't want to screw it up. There's a short down here. It's new week opening gap. Hopefully I don't screw it up. Let's see. I mean, it's just going to spoil it. Yeah. But new week opening gap was down here. Okay. And then you go to the 4 minute or 4 hour. You have intermediate lows down here. Okay, so we go back to that 5 minute chart where we entered on. Stop would be probably like back above here. Okay. And you can see, guys, you have to risk a little more. So sizing down, taking, sizing for your max loss. So if you want to lose $500 per trade, you're going to be taking a third of whatever. You got to size for your loss, not size. Not a flat rate size. Okay. Hopefully, I think we've gone over that. Just measure the move, right? So if I'm like looking for an entry, okay, waiting for this candle to close, what I like to do is set this where I want to put my stop at and just kind of measure it along. And I'm like, okay, roughly 80 points. That's like 100 points. 100 points, 5 micros is $500, give or take, right? So no, it's like 750, right? No, it's $1,000. I don't know. You get what I'm saying. Target, right? You can have it all the way down here if you want. New week opening gap. You can put it there for 1 to 2, right? Whatever. You could even manage it, take some off if you're in micros or in multiple contracts, scale it out right there. We hit play. I already know this trade hits because it was beautiful. I mean, it hits so fast. Did I not click it? I thought I did. Yeah, click. And you can see we dance around a little. And then yeah. So right there is actually a really good example. I do know we fill new week opening gap, which is why we're currently seeing some upside today. But if we text box here, order of ops, okay. If you look under tips right there, target a 1 to 1, 1 to 3, 1 to 2, right? You want to have that low risk to reward, the lower risk to reward, at least positive, so at least a 1 to 1. But you don't want to be targeting anything crazy because you're looking for that high win rate, medium to low risk to reward. Okay. So because market lately has been chopping around, that's the whole fucking point of all this mess. So that's literally all of it. It's so simple. As far as like, all the kind of new points of interest things, just think about it as liquidity. Okay. There's just a whole bunch of different names for them. I just use them just so I can mark out fair value gaps without clustering my shit up by putting boxes everywhere. Pretty damn simple. It's really not super complex. I think a lot of you guys, personally, I like it a lot because I'm done within like an hour of market open and then I'm off to the gym. Makes my life super easy. So if you need any more questions or have any questions, put them inside of the mentorship sort of thing, or just DM me. Just don't put it in the main Discord, the broad, and I will get back to you on that. If you want to take notes, put down the order of operations. Okay. Point of interest hit. Find a break down the chart to find a leg that has a singular fair value gap on the highest time frame 1 through 5 minute time frame. Wait for an inversion of that fair value gap on that time frame. That 5-minute fair value gap needs to be inverted on the 5-minute chart. That 2-minute fair value gap needs to be inverted on the 2-minute chart. Okay, that's important. Target other points of interest in the direction of the trade, the opposing point of interest. Okay, but look for about a 1-to-1, 1-to-2, 1-to-3. Don't aim for a 1-to-8. Okay, and then manage your stops pretty quickly. Put your stops at break even once you reach intraday lows, intraday highs, wherever, just somewhere inside of current price action, basically like a low time frame liquidity sweep. Manage the trade to break even, just so you can continue to have break even days instead of like losses, right? This has a decently high win rate. I'm pretty sure right now it's technically at 100% win rate by how you can do it with discretionary. I did take a break even trade on Friday, but Friday's price action was just crud and I did not like it, so I wasn't really even mad, but still positive by $3.80. So far it has a 100% win rate. Not to say that's going to be, never ever think a strategy has a 100% win rate. It is unrealistic, but it is the truth as of right now. So just use this in your arsenal, take the notes, low risk to reward, high win rate, and invert fair value gap. It's the same SMT shit, just is a different model. Order of operations, different order of operations, different model. So cool. Like I said, have any questions, put them in the mentorship or DM me directly. I'll help you guys out and we'll go from there. I might make a real video of this, like explaining it in depth to the public, but I wanted you guys to have the first access on it because that could be like 3 months down the line. I'm not worried about that right now. Okay. I make my money trading out on YouTube. This is for you guys because I appreciate you guys. So I will see you guys soon and we'll get the live streams back up for you guys who give a shit. I'll see you guys.